Welcome to the third day of Bhiforex Masterclass. Today, we are going to be looking at the right way to read market structure. And before I start, I would like to make reference to some things that you already know about market structure, because I believe that most of you that will be watching this video, you already have an idea. And the idea that most people have, or you may have, of market structure is that it can either be in an uptrend or a downtrend, right? And you know that uptrend looks like this, and then downtrend looks something like this, like that. So I'm going to have to move this down. So you know that uptrend is when the market goes up, and downtrend is when the market comes down. And then we also have consolidation, is when the market does not trend, right? Doesn't form new highs or new lows. It might randomly form a new high, then it quickly goes back into the range. So consolidation is just a range bound market. So look at how clean this is right here. Price forms a new high, retraces nicely, forms a new high, retraces nicely, forms a lower high, break structure, retraces nicely. Consolidation looks so clean, right? What I want you to know is that you won't always get it like this. And that is the reason why most of you are still not able to trade and find consistency, because what you're taught is not the same thing you get to experience when you engage the market. It is not the same. So, what I'm going to be teaching you is going to be what you are going to see in the market, and not just the random thing you've heard over and over again. Trust me, market does not always form perfectly like this, but it is just a general way you can reference the market structure, that a general way, a general pattern that the market likes to move. So we are going to go to a live chart. As you can see, this is moving presently. This is EuroCAD. I decided to use this so that I'll be using a lot of charts, gold, US 30, so that what I don't want to just stick with one, because you might not be trading whatever I stick to. So whatever you love to trade, just be patient. It's a matter of time before I get there. Okay. So yesterday I think I used I didn't use any chart yesterday. Today I'm using a euro card. Tomorrow I might use the dollar. Next tomorrow I might use the JPY. Before you know it, I'll be on gold and silver. So when it comes to the market, when it comes to trading, live market, okay, the market structure can be confusing. The market structure can be used as a trap. The market structure can also be used as engineered liquidity. And what I mean by that is it can be used to create or to lure traders into the wrong direction in order for you to be able to move in the right direction. Trust me, there is a saying that the market is never wrong. You are the one that tend to get it wrong. Whatever the market does, it will always give you a footprint. It will always tell you something before it does it. And it is your duty as a trader to be able to know what it wants to do, to be able to figure it out, and to be able to take the right action. And it is until you take the right action before the market will pay you. Okay. So I like this chart because it is so messed up. Okay. It is not the general thing that I drew down there that looks so perfect. This is what you get. In fact, it can even get much worse than this. And if you want to be consistent with trading, with consistently making profits, you must be able to cope. You must be able to understand any kind of markets you face. You have to be able to. You must be able to. All right. So don't always expect it to be easy. In fact, it will always be difficult. That's the truth. It will be once in a blue moon that you get a simple market structure. Most of the time, it is difficult to even understand what the market wants to do. But if you have guidelines, you have rules, you have processes, you have things that guide you, you have things that you know must exist before something happens, then you'll be fine. All right. So this hero card, we can see going back, it was moving aggressively up, and we can assume that on this 4 hour time frame, I'm using 4 hour time frame because of trend sake. Okay. If you don't want to use the daily, you can use the 4 hour time frame to find the trend. Maybe not a long term trend, but it can give you um something like a trend that can last a week or two or even a month. You can catch it with the 4 hour time frame. All right. So first thing we will notice is it was going down at some point. Sorry if my voice is somehow. I'm having a cold. So it can go down at some point. It was going down right like that, and all of a sudden it started going up. Now, what happened? A lot of people like to catch reversal. Okay, the four trade elements. We have a consolidating market. We have a trending reversal market. We also have a a retracement, sorry. And then if you look at this particular market here, it was a reversal. Okay, out of all the four, this is a reversal. And how can we tell for sure that price is reversing or price is changing its trend? Well, it is quite simple. The best way to figure it out is you get an okay, let me just write it down. You get a field swing, and you also get a shift in market structure. So, what is a field swing? A field swing is when price fails to form a new high or a new low in a trending market. Now, this is not enough because a lot of people have used this wrongly. They'll say, oh, price has formed head and shoulder. Now it wants to reverse. No, most times this is just a trap. Like I said, market structure can also be used as a trap, as an engineered liquidity. And that is one way. It can form head and shoulder that a lot of people teach, and it will continue going down. Like here now, they will say this is the head, this is one shoulder, and this is another shoulder. Then they want to buy here. Most times it happens like that. It will just keep dropping. So it is not enough. You need more confirmation. And the confirmation is the SMS, which is a shift in market structure. What is shift in market structure? A market structure shift is when price has not only formed a fail swing, but it has also created a new structure. That is, it has created a new high, a new low that tends to support another bias. Okay. So for instance, here now we have uh let me analyze this. So there's a little order block here, right there. Price traded into it, gave a rejection and dropped. Okay. Going to put it to short position because that was a nice sell. And it came all the way to about 160 something pips. The stop loss will be somewhere around here. Very tight stop loss, considering that we're using this other block to take our trade. So this is a 1:8 trade. So that aside, let me delete that. So after forming this new low, you can see this low here. It came back for a retracement, tried to push back down, and then it failed. That is your FS, field swing. So now that is what retail metrics call um, head and shoulder. Okay, then they jump in on a buy, then price most times, in fact 70% to 80% of the time, it will just keep going in the initial direction. So but this time price formed a lower high right here. Then look at this candle. Now this candle is what I want to talk about, because in smart money concept we are more particular about candle bodies, right? And there is this particular candle uh from the retail metrics that is very important, and they call it the engulfing candle. You see this there, this here, this engulfing candle, it is more like the only thing that smart money can use from all the candlestick pattern, blah blah blah. Engulfing candles, let me tell you something about them. First of all, they show you that there is an impulse, or there's a momentum rush into the market in order to move in a certain direction. This candle tends to break market structure. This candle also tends to form a gap. Three things, I'll repeat. This candle can indicate that there is a rush of momentum. If you don't understand what momentum means, don't worry, we'll get there. There's a rush of momentum into the market. And secondly, it also means that this candle is going to break market structure. It's going to be the first candle that changes the bias. Thirdly, this candle tends to create a gap. Okay, go and find out almost every candle that breaks market structure, they usually form a gap. They usually form a gap. Look at this one here, this engulfing candle here. This was at the point where this whole movement downward started. So that first single candle usually is the one that introduces or ushers in the liquidity for price to move. So I like to see it, to be sincere. If I want to take a trade, I like to see that big candle in my direction. Then I will be very happy to jump on the trade. So look at this bullish engulfing candle here. Created a little gap right there, then came back to close that gap. Mind you, it went all the way down, touched this other block, then rejected by closing above the gap, which shows us how healthy the gap is. Now I'm going to identify the gap now. So I'm teaching you market structure, how I read it, candle by candle. Okay, that is how you should do it. So look at that little gap, which also coincides with a bullish order block. This bullish order block also represents a market structure high. Okay, because market sold before something else happened at the next 4 hour. Okay, so if you go to like 1 hour, you're going to find out that that point there was a swing low. So this represented our momentum, also represented break of structure, also represented a gap. On filling it, that is where you want to be a trader. That is when you want to be a buyer. Okay, so price comes back to fill the gap, and then respect all the rules of fair value gap. That is, price must not close below it. It is fine for price to trade through it, but not close through it. And he did all that. Then eventually, I think the next day, the market opened, and look at the massive jump to the upside. So if you are taking a trade here, when the market opened the next day, or maybe there was a news, it just gapped up. And that was the beginning of this massive, massive long uptrend, and this is just last week. Okay, so if I didn't explain everything I've said now, you probably wouldn't be able to read it that way. And that's what we are going to be doing throughout this markets, this masterclass. We're going to be reading market structure on another level. Okay. I love to do it. It gives me joy. I like doing it even more than trading. I like to see how market moves. And you must do the same. You must like it the same way. Okay. So again, we created this void, liquidity void, and you can see immediately price jumped up. It came all the way back down to almost losing everything, then leaving the week. Usually when they do like that, they tend not to come back to feel it fully again. Okay. So this came back, didn't quite come all the way to come and close up this one, but this was enough. All right. And then kept going on and on and on and on like that. So another one, we have a other block, price didn't quite get to the other block, but did some retracement and then it kept going up. So now I've just showed you what a lot of people struggle with. Make sure you watch it over and over and over and over again. Okay. How market structure can shift without making it obvious. That is what happened here. It wasn't obvious. It wasn't obvious. So secondly, I want to teach you also how to pick your point of interest using market structure. Again, you find out that most times ICT will pick this particular candle here as its point of interest to take a trade. And market is going to come there and just stack. Why? Because you might feel like, oh, look at this big candle here. Shouldn't price come to close it up? No. It tried moving up here to go and close it. It tried for 4 good hours. That is why you have that blue candle there. But it failed. On failing, it has already formed a new market structure, high and low. Came down, formed a new leg, then retraced to close the new gap it just formed, which is this black one, no longer this one. So it's okay. It is very okay for price to leave one gap open and then proceed to go and close to create a new one and close that new one. All right. Here now again, there's a little gap here, and that's what price came to close. So if you're looking for your point of interest, don't just be fixated on just one particular point of interest. Please always have your mind on other options. This is a fair value gap. Okay, it's not random because it's just one that is there. So don't say, oh, I just picked it randomly. No. And then this is a other block. So how should you trade? How should you approach this? It's simple. Keep those 2 points on your chart and then tell yourself that if price comes to this gap and then it doesn't close below it, look at this black one, came all the way then rejected, then the fair value gap is going to hold. But if they just close, if they close below the fair value gap you've identified, then you should know that they will come to your other block and then you should be patient for them to come there. And that's what I did for Euro USD chart I shared on as signal on last week Friday, and it's still running till now. I'm going to show you at the end of this video. So look at this terrible one here. It looks too bad, right? It is quite simple. Let's identify, let's analyze. First thing we have here is, let's look at this area. I'm going to put a big box over the area. Good. Focus on inside this green box. Let's say that is all you have in price action and you want to trade. How would you approach this? Firstly, we can see we have a bullish order block here. Is horizontal line. Good. And then price trades into the bullish order block. So I also want to let you know it's okay to take losses. Trust me, it is part of the game. There are times you take a sniper entry and price will just Eventually go to where your stop loss is and then take you out. We'll talk about that as time goes on. So let's say you want to catch this whole move, okay, but they took you out first. What should you do? Well, this is how I trade. I'm not saying I don't get stop loss. Even ICT gets its stop loss it most times or sometimes. The point is to keep it low and keep your wins high. That's profitability. So you take a buy on this other block. Number one, I wouldn't take a buy on this other block because there is something that I would need to see that did not form. So I wouldn't have taken a buy there. What I would like to see, I may not be able to explain it in this video because time is already fast spent. So what I just want you to know is that price came to the other block, right? Then it failed. On failing, this candle that caused this other block to become invalid is the candle that ushered in the momentum, right? It's a long candle. And I said such candles usually create gap, they break structure, and they identify as they tend to be the one to usher in the momentum, right? And what this black one here stands for. So it created a gap. Now we are going to mark out the gap it created. And then you're going to see how the market actually works now. So immediately created the gap, it came back to fill up the gap. If you go to 1 hour, you'll see how nicely it retraced into this gap. Now, let's say you take a sell. Like, okay, price came back into my gap. Now I want to be a seller. Okay. You take a sell inside that gap. And price went in your way for a while, and then boom, maybe you move your stop loss to break even. It takes you out again. And now you're confused. You're like, oh my God, what is happening? I bought, they sold. Now I formed a sell market structure and now it's buying again. See, don't ever be confused. Hmm? What should you do? Read the market structure. It's just like when Christians are arguing about something in Christianity. What do they always tell them? Go and read the Bible. What did the Bible say? Or what is the Bible saying about it? Or what is the Quran saying about what you are arguing about? Then go and read the Bible or read the Quran. Whatever it says, that is the answer. Your opinion doesn't matter. It's the same thing here. If you are confused, if you're arguing, or you have somebody you're trading with, and the person saying, bro, I told you it's a sell, or I told you it's a buy. That's not the point. Your chart is like your holy book now. What is your chart saying? Okay, you took a sell and eventually came back to take your out. Now, that high, okay, this high that you were taking out from represents a new market structure. And price going above that is a break of that market structure. Then what should you do? That same fair value gap you took your trade from will now be the same fair value gap that you take a buy from. And that's inverted fair value gap. In fact, this fair value gap can be used over and over and over again. It is active as long as price is above it or below it. It's your reference point. So you take a buy here, boom, all the losses you've made are all made back. Then what happened? Price came back to where? This fair value gap and this other block. He bought again. Then what happened next? Failed to take out that high. That is a failed swing. And that can mean a reversal. So what happened? Price came back. Sorry, I'm trying to be fast because I know I've already taken much of your time. So price came back, while it was trying to go up. Just look at all the market structures. There's a fair value gap here that price came into, perfectly traded up. There's a full, bullish fair value gap that is yet to be closed. So price came back into it. Then what happened? Boom, break of structure. Broke this low that was respected inside the fair value, inside the bullish order block. Then retraced. close this little fair value gap, boom, down. That's how to trade. Now, if I'm in a buy, let's say I'm in a buy, like I took a buy all the way here. When I see what has happened here, I will close my trade and probably take a sell. I might take profit here. See, what kills a lot of people in trading is not that they don't know how to trade. It is the humanity in them that kill them. And humanity in them is sentimental. Looking at where price is right now, we can see there's a bearish order block right there. And there's also a fair value gap, this long candle. And price is currently rejecting it. So this bearishness has not yet ended until we take this high, we close above it, then we start forming new market structure, just like we did here. If I can start looking to buy again. Like I said, humanity, trading is like going against humanity because humanity has sentiment, emotions. We literally judge everything and live our lives based on emotions. But in trading, your emotion is not needed. The market does not even recognize who you are. So you just have to put your emotions aside and read it the way it is. Right? So quickly, let us go to the euro dollar. Now, for the euro dollar, was using the 60 minutes, and well, I won't be able to analyze it because our time has gone past 30 minutes, I guess. So last week, I made a post on the public channel that until price, just like what I explained on the euro card just now, that's exactly what happened here. You can see price from this long thing here, and a lot of people will be like, oh no, it has to come and feel it. No, it tried doing that here, then it failed. It crashed. On crashing, that becomes your new dealing range. I guess you know what that means. If you don't know what that means, send me a DM on Telegram and I'm going to direct you on what to study. If I've mentioned a lot of times, join our Telegram channel. Okay. Send a message to the admin and you get some documents you can study so that you know and catch up with all the big terms I've been using, like fair value gap, order blocks, and so on. So I said, if I sent this out as a signal, I didn't take it because it wasn't my typical kind of setup. And that's to be sincere. But it is impressive to see how it worked out. Okay. So I said this area is fair value gap for 1 day time frame. And I also said here we got a potential continuation down as the market has not shifted to bullish. Why? Because there's a break of structure here, which is this low. There's a swing low here, a swing high. There's a swing low. There's a lower high, and I sent a signal that okay, price is going to keep selling from there. Even though we are in a bullish fair value gap on the 1 hour, on the daily time frame, as long as the market does not shift to become bullish, it will keep dropping. It can drop forever, for life, if the market does not change its structure. And that's what we have here. Today now, we tried pushing up, but did they break any high? This high, this swing high? No, it's rejected until they eventually come back up to take this high. Before I will now say, okay, guys, whoever took the signal, you can close your trade now. The market has finally shifted inside our daily fair value gap. But until they will do that, I also said this area is bullish order block on the daily time frame. So price will drop here. If we don't get a market structure shift, it will keep going down. As simple as, no need to be sentimental about it. If market has not done something, don't say it will do it. It has not broken market structure, but it is inside a daily fair value gap. So don't say it's buy. No, it has to tell you that I am ready. Okay. So I hope you've learned something. If you've learned something, make sure to like this video and leave a comment. Tell me what you learned. I'll talk to you tomorrow. Bye.